Good morning then everyone, as we're about to head into European trade on our Wednesday the 12th of February. There was some kind of, I suppose, a bit of strange moves in markets yesterday. I mean, Jerome Powell out yesterday testifying in front of the Senate, asked a bunch of questions about things like tariffs, things like Elon Musk's role in government, safety of people's bank accounts, other issues reflecting the unsettled nature of the administration's first week. So been a bit all over the place from that point of view, but declining to comment on all that sort of stuff, which is completely fair enough. It's not his business really to get into that sort of stuff. Sort of his own personal viewpoints on that sort of stuff is pretty irrelevant. I mean, understandable why he was asked, also understandable why he didn't want to answer. Basically what he wants to answer is say that the economy is good, the economy is performing well. The Trump administration were handed over a pretty strong economy that was performing well, and especially with that NFP print from last week, we'll obviously see what inflation has to say today. And an economy that is performing well, not really any need to go and cut interest rates lower, and he is reiterating that stance that kind of pushing back on any interest rate cuts this year, saying that his exact words were they're in no rush to cut interest rates again. So which is no surprise. I mean, that's what we expected to come out of him. That's what we'd expected him to say. Didn't clarify whether we get 1, whether we get 2, whether we get 0 through the year end. Just saying that as of now, at this moment in time, there's no need to cut interest rates, which is actually, which he's absolutely correct in saying. I mean, he does have a bit of political pressure from Donald Trump to lower interest rates, but his job is not to give in to the president. His job is to do what he and the Fed seem right, and what seems right at this point in time, regardless of what Donald Trump says, is you don't get lower interest rates, and you will get lower interest rates when the economy starts performing poorly, which is exactly what he's saying. So if the labour market takes a hit, inflation takes a hit, and there's no need for interest rates to be where they're at, then he will lower interest rates. So all depends on the economic data, and the economic data at this point suggests no need for lower interest rates, which begs the question why you saw some broad-based US dollar weakness yesterday. I'm not entirely sure about that one, to be perfectly honest with you. I mean, you can see your I said broad-based, but you can see your Aussie, Kiwi, Euro and Sterling all popping to the top side yesterday. Dollar yen kind of going higher yesterday, but that was, or overnight should I say, that was more driven by kind of US bond yields going higher. And US bond yields going higher is completely understandable from his remarks yesterday, but then bond yields going higher and Euro and cable going higher, that doesn't really make sense to me, to be honest. I mean, dollar CAD pushing lower also doesn't really make too much sense. I mean, dollar CAD grinding its way higher yesterday, dollar yen grinding its way higher yesterday. That makes sense off the back of those remarks. No need to cut interest rates. It's more hawkish than dovish remarks anyway. Clarification that we're not going to get interest rate cuts anytime soon. The only real explanation for this US dollar weakness is just that you've had US dollar bid for so long, and people have been long for quite a substantial period of time, and then you have US inflation today, so maybe a bit of risk off the table. It's my best explanation to it. Other than that, I'm not really entirely sure, if I'm being honest. Sometimes it's best to admit that. Stock index is just messy across the board. Your S&P, Dow Jones, your Nasdaq and your Russell all over the place. The DAX, the Kakarot and the FTSE kind of grinding their way higher. I'm not really entirely sure what drives the DAX to half the time. I mean, you've not exactly got a German economy or a European economy that's performing that well. Certainly not an economy where the stock index should be doing that over the month of January, but what do I know? Maybe due to the fact that the ECB are on a clear, they say that they're on a clear path on interest rates. They've cut interest rates multiple meetings in a row, and they say the path is clear and there's no change to that, so they are going to continue cutting interest rates. That's got to be the reason for the DAX pushing higher, because it's certainly not down to the economy performing extremely well. So Other than that, gold off the highs. Didn't quite get up to 3,000 on gold. 2,940 we got up to on gold. No surprise this had a bit of a pullback. Hawkish remarks from Jerome Powell removing the prospect of interest rate cuts in any time in the near future. Right, that's something that's negative for the price of gold. So we'll see what happens to gold off the back of inflation today. I mean, gold is a bit of a hedge against inflation at times, but any sort of relaxation on tariffs and kind of clarification that we're not going to get any interest rate cuts, likely to be negative for the price of gold. Do we see 3,000? Do we not? I mean, if you're a dip buyer and you believe in 3,000, it's a good level to buy a dip at. You get a Fibonacci retracement on in there. I presume you'll get a Fibonacci retracement on there. It gives you a good technical level to buy at, in and around there. You've got these recent highs from back here. So from a technical standpoint, if you're a purely technical trader, it's not a bad shout to get long in and around that level. If you're a believer in buying a dip of gold, decent level to go and buy that. So I mean, what do you do with that information? I'm not entirely sure. I mean, you did have hawkish remarks from Jerome Powell. I definitely wouldn't go doing anything before inflation comes out on 130 today. So that's what we need to look at today. But a bit of US dollar, a bit all over the place yesterday. Probably more weak than it is strong. I know strong against a couple of these, but it's weak against 5 of these. So it doesn't really make too much sense to me. Stock index is a bit all over the place. Market's clearly waiting for CPI. If these weakness moves in the US dollar are a bit of risk off the table of CPI, it further confirms the stance that we are going to the market is waiting for, which would be completely understandable. So we do have also Jerome Powell testifying in front of the Senate again at 3 o'clock today. Now he will do that with the knowledge of what the inflation print is, and the Senate will question with the knowledge of what the inflation rate is. So no doubt he'll probably get some questions about that. He'll probably be a bit off topic. He answered the questions about the economy yesterday. He talked about Musk, he talked about Trump, he talked about tariffs, talked about the safety of banks and all that sort of stuff yesterday. He's not likely to get those same questions again today. So the second day of when he testifies in front of the government, he doesn't. He never really says anything on the second day. It's always the first day that has the information that you want to know. But today you do have that inflation print, which no doubt he will be asked about. Headline figure expected up at 2.9%. So if you have a look at where this has been, it's been rising pretty steadily. So from 2.4 up to 2.6, up to 2.7, up to 2.9, and this is 2.9 back when it was above the kind of 3.4 from the year before. So inflation heading in the wrong way in the US. If these beat consensus, that opens up tradable opportunities. That opens up opportunities long the US dollar. Probably short stocks, you would think. Maybe long some gold. I'm not really sure. I'd definitely stick with the US dollar though. That comes in higher than anticipated. Any sort of notion of a couple of interest rate cuts through to the back end of this year will take a hit, and especially core CPI. If core CPI comes in at 0.4% month over month, it managed to take a tick down. It was pretty stubborn at 3.3% for 3 months on the spin. Managed to get down to 3.2 over the month of December. If over the month of January it goes back up to 3.3 or something, it's expected to tick down as well. CPI month over month again expected at 0.3. Both of these are too high for a month over month basis. If they come in 0.4, or the year over year figure comes up at 3%, or the core year over year comes in at 3.2, 3.3, that opens up the best tradable opportunities for us today. If that comes in below consensus, misses consensus, and all these metrics start to tick back lower again, it would be weak US dollars. I think the currency is the better trade on this. I think today stocks. Yeah, I mean, you could argue both directions. On a weak CPI print, you could argue long stocks. You could probably argue weak stocks. On a strong CPI, you would lean more towards stocks lower. But then selling stocks isn't easy at the best of times. So yeah, I'll stick with the US dollar on a day like today. Anything beating consensus here should be fairly simple longs of the US dollar. Anything below consensus, probably you want all lower on all four metrics rather than just one or two. So we'll see what that has to say. But I think better opportunities come from from a beat across the board rather than a miss across the board, in my opinion. Then we'll see what Jerome Powell has to say at 3 o'clock, and that's pretty much it for today. You do have oil inventories, which is maybe something we need to look at. You got the API oil inventories from yesterday up 9 million, previous 5 million, consensus 2.8. It's up at 9 million, so massive excess supply from that print yesterday. Be interesting to see if that follows suit today. Couple that with things like, OPEC increasing oil production, Donald Trump wanting to go drill for more oil. Surely that's pretty simple shorts on the price of oil, isn't it? But yeah, let's see what inflation comes out today at 1:30. Certainly watch those oil inventories for anything short oil a little bit later on. So you get it above. If you can get above consensus, if it comes in 9 million like that yesterday, I think definitely be getting short some more oil. So what I'm hoping for today, inflation prints across the board higher, long US dollars, oil inventories higher, and short oil would be my preference today. So we'll see how that pans out. Best of luck trading CPI. Get stuck into it, see if you can make some cash, and yeah, we'll update again in the morning.